that don't want what we know out there.
How a person can go from really almost nothing to becoming a millionaire by owning rental properties.
He would always buy these flip houses, and I just remember thinking, this guy is crazy. Why would he buy that house?
In the past decade, there's been a huge surge in the peer-to-peer short-term rental market.
Become an insider. So you have to know the rules before you get the game.
Every second counts. So make every second count.
Welcome to the Real Estate Jam. Whether you're just beginning or the best of the best, we're glad you're here. We will share successes, failures, and strategies for the action-taking real estate investor. And now to your hosts, JD and Melissa.
Hi guys, welcome to the Real Estate Jam podcast. I'm JD with my wonderful co-host.
Hey, how are you?
Melissa. Today we got a really awesome show, and I'm excited because I don't think that we brought anybody on the show investing or helping others invest in this kind of way. We have Ali Nichols. She's the co-founder of Getaway, and Getaway is a company selling fractional shares in short-term rentals. She's selling them to investors, and it helps out a lot with people who are maybe new to investing or don't have a ton of capital to put in and go and buy their own $1 million beach house. Ali, we're super excited to have you on the show today. Thanks for finding time for us.
Yeah, thank you both for having me. Really excited.
Awesome. Well, I know you have a pretty extensive resume, but would you mind sharing with our audience, you know, who you are, where you came from, and then how you kind of got into this real estate thing?
Yeah, of course. And I appreciate the intro as well. As you mentioned, I am the co-founder of Getaway, and it is a real estate investing platform that allows everyone to be able to get access to investing in short-term rentals, starting at just $1,000 per share. That, gives you access to making the short-term rental income on a quarterly basis, and then the appreciation of the underlying asset over time. Beyond just that initial investment, there's also kind of an investment in your lifestyle, the same reason anybody buys a short-term rental usually, where Getaway members can actually stay within the entire portfolio of properties at discounted rates and perks. So a financial investment in the real estate, and then also an investment in your lifestyle as well is what we're building. Prior to Getaway, I actually led real estate growth and strategy at a startup called Bungalow, which was focused on helping institutional capital deploy into single family rentals, so more on the long-term space. And what I found out there was we've built all this amazing technology and process to go out and underwrite a bunch of homes as investments. Why not start doing it on my own? And quickly realized when I got out to the market that, a semi-successful millennial professional was still priced out of acquiring a bunch of real estate, let alone managing it effectively to really turn the profit that I was hoping to do. And that's when this light bulb idea came up for Getaway, is like, what if I could build a platform for really folks like myself that, are working full time, but are super interested in the space and want to start with a smaller dollar amount, whether that's $1,000 or $5,000, to really learn the ropes of investing before you make a commitment and buying a property all on your own.
Oh, super cool.
Yeah, it is. I'm wondering, so is this like a crowdfunding platform? Is this like a timeshare company? What is it, and how does it work? Not just for the investors, but like you on your side. What kind of fund are you? Said that you could accredited and non-accredited investors. Can you talk to us a little bit about that?
Yeah, and it's so funny. You've really hit the nail on the head of like the two ideas we're trying to marry. So on the real estate acquisition side, it's very much a crowd-funded investment opportunity. We're pooling capital from all of our customers to be the equity portion in each investment, and then be the parent company, or Getaway, is then helping facilitate all of the operations of that home down to the property management. And then by doing so, we're building this network where our investors actually have special, preference and treatment to stay within homes in our network. So trying to build a brand on the hospitality side of getaway properties all over the country and hopefully soon to be world, where our investor base has access to those, priority to the general public and at rates that are more exciting than if you were to try and go rent a short-term rental, randomly in a market.
Can you break that down? Like, just like pick one, how that works from the start so that I can understand it better.
Yeah. So our first offering is in Scottsdale, Arizona. And so we are raising we've levered that specific property 70%, and we're raising the 30% of equity from our investor base. And then once we've acquired that property, it goes into, it becomes an active rental on platforms like Airbnb, VRBO, Booking.com, etc. But for our member community, they actually have a direct booking platform through getaway.com, and that's where they can realize, their discounted rates and have access to the calendar being open, ahead of the general public and things like that.
I guess I'm looking to go back as before that. Like, how do you acquire the property? From the very beginning, how does that look?
Is it set up like a syndication going in to purchase the property? Are you the general? Or you're bringing on general partners? So what does that look like?
Yeah, so you can think of our customers as like the LPs in a syndication. Like we view Getaway as the GP, where we're putting the deal together and then bringing on the capital to close the deal. So we'll go into contract on a property, basically crowd fund the capital required to close, and then close on the property, and we'll do all of the asset management and property management from there on out.
So who acquires the property? How do you find the property?
Yeah, so Getaway does all of the sourcing and underwriting of opportunities. And that's one thing that my co-founder and I built at our previous company when we were supporting institutional clients, is that essentially like technology of, sourcing all of the available listings out there, running them through our own underwriting algorithms, stack ranking the best opportunities on the market, and then going through our acquisitions team goes through and underwrites each opportunity from there. And then we only go after the best opportunities that fit within our buy box.
Sure, that makes sense. Now, when you said that you have this opportunity open for accredited and non-accredited investors, how are you making? Do you have to have a pre-existing relationship and all of that kind of stuff, or what are you doing to stay in line with the SEC?
Yeah, that is a great question, and where I spent a lot of my time. So we went through, the SEC has a new type of offering called Reg A, where we've gone through a qualification process with them that allows us to open up fundraising up $75 million per offering through the Reg A non-accredited investors. The interesting thing of like the nuts and bolts of how that works is everything is within an entity, and our customers and investors are buying ownership shares in the entity versus just the specific property, which can be a little bit different than other offering types.
And so you're saying that the entity, as in all of the properties that Getaway has, not just a single individual property?
So to start, we're focused on there's one entity per property. So investors would be investing in a single property to start. Gotcha. Over time, we're going to expand to ideas like collections, or more of a fund model where it's like we're really focused on like South Florida coast. So let's put together, a fund of 15 different properties that meet those criteria. But currently, we're just doing single level properties. Okay,
great. So now you've identified the property, then you fund it with investors who are buying shares of your LLC, and now you are Now you are paying them out quarterly based off of whatever fractional ownership they own. You're paying them out from your net cash flow. You're paying them out. Obviously, you can't talk specific guaranteed returns, but what does that model look like as far as the cash flow to the investor?
Yeah. So as we're underwriting, and this is constantly changing given where rates are at and things like that. But we're really trying to target a 10% cash on cash investment from a buy box criteria, 10% plus. And so, if all goes well and properties perform to our underwriting, and we try to be more conservative there as well, that's what we're looking to achieve with the current conditions.
Sure. And are they getting a direct equity stake in that individual property in proportion to the price of the property and the price they put in, or are the GPs getting a certain percentage, 20% of the deal, or whatever? What does that breakdown look like?
Yeah, it's a great question. So we, on average, as a GP, we will keep about 1% interest, equity interest in the property, but we're actually buying that as well. So everything, from our investors' perspective, there's 100% available to buy. We're not keeping a percentage of the equity for ourselves. Instead, we're just including a sourcing fee. We're putting the deal together up front, but it doesn't come out of the equity portion.
And so you guys are also running the property management, or you are managing the managers?
So we are running the property management as well. And reason being, we feel very strongly that we care the most about how these properties perform. And so we're very focused on ensuring that we're running, the revenue management extremely well, marketing the property as well, and really trying to drive that top line. And then on the operations side, we're partnering with, really trusted third-party vendors in markets. So, the folks that fuel your short-term rentals, whether it's cleaners or maintenance folks and things like that, so that we have a 5-star service all the way around.
Sure, that makes a lot of sense. Now, one of the questions that I think I'm wondering how it works is you're focused on your revenue to be able to pay your investors, but when they're getting first crack at the bookings, they're coming in at discounted rates? Are they not having to pay anything? What does that side of it look like?
Yeah, so on the discounted rate portion, there's membership tiers. So the more that someone invests, the higher the tier they are from a membership benefit perspective. And those benefits kind of scale up with how invested you are in the platform. So, if you've invested $1,000, your discount level is different than someone who's invested $100,000. And we've made those proportionate that they still benefit the investors in terms of, staying in a getaway property will be more advantageous for you from a dollar and cents perspective on your travel, but have also married it with the fact that we don't want to eat away at the return profile for the investors as well. So there's things that we get to kind of play with, you could say, in terms of having folks book directly through us versus going through one of the booking platforms that charges both the guest and the host fees to use their services. And then in addition to that is we have this super engaged investor network where we can, offer our investors like perks and promotions to stay at properties with super steep discounts, especially in times of years that they most likely weren't going to get bookings, like in shoulder season. So our thesis, and let's talk in a year when a lot of this is played out, but is that we'll actually be able to drive much higher occupancy throughout the year and a higher return profile by leaning into our investor network and encouraging them and promoting for them to stay within the getaway property.
Sure. Yeah, that makes a lot of sense. Okay, so now you've purchased this property. Are you planning? You've purchased this property, got it funded, brought these people in. Some are paying a discounted rate, and the general public is, and you're getting returns that exceed what you expect. What is your strategy for disposing those properties, or are you holding them forever and then, moving forward, or, what is the criteria for when you're going to sell these properties or exchange them, or, whatever it is that you guys are going to do on the backside?
So our planned hold period is approximately a 7-year hold, with obviously the right to be able to adjust that slightly shorter or slightly longer, depending on where the market is, because our focus is to maximize appreciation for all of our investors. But going into it day one, we're looking at doing traditional real estate cycle hold. Now, phase 2, and something we're really excited to launch in the upcoming months, is a secondary trading marketplace. So, JD, if you had purchased $5,000 worth of shares of Scottsdale property, and that property had appreciated, in 2 years, let's say 10%, you'd be able to actually sell your shares to somebody through our marketplace who's interested in then acquiring those. So that's something we're really excited about building out and having as an option to create more liquidity of the assets.
Great. Okay, so now the investor has gotten their money back out of the property. Ideally, you want them to invest it again, right? I guess that's what we would want in
yeah.
So you're constantly having to either open up new markets or find new and better properties. Are you only in Arizona right now, or have you gone to some other areas?
So we're currently in Arizona and Florida, and we're actively pursuing Southern California currently.
Okay. And how are you evaluating your markets, the markets you're choosing to go into? Is it based off of the teams and relationships you have, or is it more where we finding the best returns at this time?
So it's a combination first of where do our customers, our investors say they want to be invested? Like, what is interesting to them? So we're calling it our demand-led supply model. You tell us where you want to invest and how we can create access for you in that market. And then paired with, okay, how do we find the best deals in the market? Again, trying to really hit a double-digit, rental return yearly.
Sure. You're buying all your properties off market or on market, or are you buying off market? And what is your typical property, your model property? What does it look like?
Yeah, it's a great question. So both in terms of on and off market, we've built amazing relationships with different brokers in the markets we're actively in, and so have had the opportunity to see some off market deals as well. In terms of kind of our buy box, it's very much 500,000 to 1.5 million. Tend to be single family homes, but open to up to 4 units. We've found that larger bedroom counts perform much better in the short-term rental market. So we're really targeting 3 bedrooms or greater. And dependent on the market, like in Florida and Arizona and the desert in California, everything must have a pool, because that is the number one criteria when people visit, is they want a pool. So that's been the buy box as of today. I'm sure that will expand over time as we scale, but that's what we're targeting.
Yeah, that's great. Okay, well, I'm sure you've had to make a lot of pitches to a lot of different investors and or other funding sources and stuff like that. What's the questions that they're asking you that you think everybody should know? What are those? And can you answer them for us? It's kind of a lazy question as a podcast.
Yeah.
But I'm sure you had more experience fielding questions than we have asking about it.
No, it's a great question. I think the biggest, from a business perspective and thinking about short-term rentals, is we haven't seen this asset class really scale to the next level, like we've seen in the long-term rental space, that's really started to become institutionalized. So a lot of questions we get is like, how deep is this market, and is it possible to actually scale and create a brand of short-term rentals? And that's something we feel at Getaway is going to happen in the next 10 years, is you'll start to see operators emerge that have kind of branded this type of hospitality property and bring consistency and a level of excellence with that across different days, whether you're in Panama City Beach or you're in Park City, Utah. When you're walking in the door what you'll get with a Getaway, hopefully. And so that's one area that I think will be really interesting across the short-term rental space in the next few years, is just creating those brands of operators.
Sure. Yeah, that makes sense to me. We have one of our friends and mentors from one of our masterminds. What they're doing, it's not on the scale that yours is right now, but what they're doing is they're Panama City Beach's market or in season is March till the beginning or end of October, something like that. And so they'll buy a portfolio of properties there, and then they'll go to like Utah or Tahoe, and their in season is the wintertime for the ski season. So they'll buy those there, and then they'll put those all in the same LLC, and then they'll also buy a regular apartment complex that is long-term rentals and keeping it all in there, and then bringing people into the fund to do that, so that the cash flow balances it out, and it also has a stable, large multifamily that is kind of the diversification and consistency. And I think your model sounds very similar, but on a way bigger scale and specifically to short-term rentals. I like the idea of being able to invest in multiple different markets with multiple seasons and not having to worry about being over devoted to one vacation rental market.
Yeah, that's true.
Melissa, you got any other questions?
No.
Well, Ali, we really appreciate you coming on. I'm wondering if our audience wants to find out more about Getaway or more about you specifically, or maybe they want to check out your site, where can we send them so they can get some more information?
Yeah, best place is getaway.co, so .co, to find more information about us, investment opportunities, etc.
Well, we can't thank you enough. It's quite interesting for sure.
Very interesting.
Yeah.
We appreciate your time. Thank you so much.
Thank you both for having me.
Thanks, Ali.
Thank you for listening to the Real Estate Jam. We hope you enjoyed today's episode. For more information, check out our website, therealestatejam.com, or find us on Instagram, Facebook, and Twitter at The Real Estate Jam. If you have any questions, feel free to drop us an email at therealestatejam@gmail.com. See you next episode.